All right, we are live for the Friday edition of the Mike and Mario Show. Excited to be back. Looking forward to connecting. Mario, how you doing, my friend?
I'm doing well. We we had a problem with our central heating. So yesterday we had a plumber, and they were here all day because it wasn't flowing through the radiator. So it's much warmer now.
Yeah,
which is good. It's been cold, but I hear that it's now going to get warmer. So it's like Sod's Law.
Yeah, so I just like right now here in Michigan, went outside and was extremely this morning, but it was a lot warmer than normal. I'm like, what's going on? It was freezing yesterday, so tricky weather. But so let's jump right in. So for those that are tuning in, appreciate you guys for joining us for this live stream. As always, throw out some topics or comments or whatnot, and we'll definitely get to those. But there's lots of things worth touching on, and I want to probably go back to the more so the beginning of the week and then work our way towards today, if you don't mind. And just to share our thoughts on what's going on and how all this is connecting together for a great cyber type of event coming near you sometime soon, possibly. Lord forbid, but who knows? But I want to go here to this article. Oh, wrong one. Let me go back here. Let me get my stuff together. Okay. The Evergrande, China Evergrande defaults on its debt. Nothing new. It's been happening. I mean, this. So, question to you, Mario. We've been talking about Evergrande now for several months now. And as of now, I think it's up total of 10. Kaiser was the last one that had some issues repaying. Now, were we being groomed for this so that it just didn't hit us all of a sudden, or what? What are your thoughts?
Well, I always like looking back at history, and if you look at the subprime collapse in 08,
yeah,
people started really looking at it in early 2007. There were I think there was the first subprime firm. Was it Century? I think that collapsed, and then you had Ben Bernanke saying, "Oh, everything is contained. The subprime crisis is not going to spill over into the major mortgage market, let alone the economy." So I think it could be a little bit like that. I think we are maybe in this Wile E. Coyote moment where he's run off the edge of the cliff, and he still thinks he's running. He still thinks he's all right before he falls. Who knows? But there are a lot of companies going under in China. They've been trying to cover it up, I have to say, the last few months. And you have to admit that people like Reuters and Bloomberg, they've been trying to play along. There seems to be a huge effort to cover it up, but now they can't. So yeah, it would be really interesting to see. I was reading Rafi Faber's his Endgame Investor newsletter from yesterday, and he noted interestingly that the next step could be that a lot of these Chinese real estate companies, they have to sell a lot of properties that they haven't sold maybe, and they're going to drive prices lower. And a lot of Chinese investors, savers, they put a lot of their money into real estate because their financial system is maybe not as highly evolved as ours, and it's a good way for them to park their money. So apparently it's like 70% of their savings are in real estate. So it could be a real problem. And I know that the foreign overseas bonds for Evergrande and maybe the other companies, it's not as big, the liabilities, but 300 billion is quite a lot. I think Lehman's was about double that, 600 billion. But Lehman, it took a few weeks as well for people to realize after the Lehman collapse. Apparently in the week that it collapsed, the Dow actually finished up at the end of the week. But during the week, it dropped like 9%. But after that finish to the week, it collapsed into 2009. So who knows? There's so much going on out there.
Now watch this. To add more to that, just the signs that are popping up that lets us know that there's definitely distress within their capital markets. There happens to be this right here. And so let me see, easing property. towards easing. So their bank reserves.
Yeah.
And so they've cut the amount of reserves needed for the banks. Oh, let me go back here. Messing up already. So yeah, so just this right here is signs of distress within the banking sector, because it happened here in the US back in, I think it was March of last year, where as of now, there's no reserve requirements for commercial banks here in the US at all. So that means people don't have, there are no real funds to people's accounts like they think.
That makes it even more dangerous, doesn't it?
Exactly. So that's like literally they're trying to increase lending, but yet once again, most of the Asian individuals, as you mentioned, they're savers, so they save in properties, and so I think this is definitely going to spiral out of control. But I think it's very timely how the events that's in Asia or China happening, as well as all the other things happening as well. And of course, we have our numbers that came out this week, so we can keep moving along with that. But then again, I want to talk about, of course, this jobless claims. I think it was on Tuesday or Wednesday or whatnot.
Yesterday, rather.
Yeah. Sorry.
Yeah.
But historical low, 52 years. So he's setting a lot of records.
Yeah.
And things is not ideal.
Well, this number is basically, it's not the unemployment.
Mm-hmm.
It's actually how many first-time claimers for jobless insurance there are.
Yeah.
And this number is not followed as closely as non-farm payroll, of course, which comes once a month, usually the first Friday of the month. And I remember following this number when I worked in the markets. It was an important number, and it was usually above 200,000. Of course, it went into the millions last year because of the lockdowns. But the fact that it's dropped to the lowest since 1969 shows that there are a lot of job openings. It is positive in a way, but I think a lot of the jobs are being created because of government spending. It's the government spending is so huge that it's flowing into the real economy. But the important thing about that is that I noted yesterday, I tweeted out when that came out because I was surprised as well, is that despite having a very tight labor market, unemployment rate, for example, is around 4.2. I'm not sure where. We've got the stock market at all-time highs. We've got commodity prices elevated. We're seeing things pick up again, like lumber. And despite that, the Fed's still keeping rates at zero. And still doing QE. Yes, they've said they're going to taper, but they're only talking about it. And that gets us to today's CPI, if you don't mind.
Yeah, let me go ahead and grab that real quick.
Even though the CPI came out as expected at 6.8%, I had a look. This is the highest number since 1982. There you go. And guess where the 10-year yield Treasury yield was in 1982? Well, it was at 14.8%. So there's something wrong there. Totally wrong. And
the stock market and the stock market's in the green.
I know. And this is a runaway train, and there's no track in about a mile or so. And there's a cliff. That's the way I feel about it. And the Federal Reserve, I think people may be starting to realize what's going on here. How can we have CPI at the same level it was in 1982 when rates were at 14.8%? And also the Fed funds were probably like 20, or the discount rate. Paul Volcker was a real hawk, but not Jay Powell.
Here's that. I'm gonna show that. Let me see here. Just a visual of the message you sent earlier, so people can see what we're talking about here. This is from your Twitter account earlier. This little visual aid here. So this is what we're talking about. So 6.8 is what we're being told, but of course we know we're being lied to. It's definitely. Let me see that. I'll find that Gunlock. A little graph as well, where he said it's more like 12.3 if you put in if you substitute the shelter for actual housing prices. So moving on up.
And actually this 6.8 from 1982 is actually probably it's not the same number as it is today, even though it's on the same chart.
Yeah.
Because they used to calculate it differently there. So
a lot different. So as a result of this, so I know the equity markets were in the green, and then I even saw metals was getting a little bit right now, even though it took earlier in the week, it took a little bit of a dip, got below 20. It was like 21.99 or something like that. I saw, I think.
Yeah, gold and silver have done relatively well here. I think they're still way undervalued, and also especially the miners, the gold and silver miners, they're not doing very well today.
Yeah,
they didn't do well yesterday, but I'm holding on. I think yes, it's the place to be. Yeah, gold is at 1784, up 9. Silver is at 22.17, up 20 cents.
Yeah.
Of course, they should be a lot higher, but
a lot higher.
I think patience is always the key here.
Right. I'm more than convinced that the goal is to neutralize these two assets here to keep them out of the attention of the mainstream, so that they can continue to pump. You know what they want to pump. And then speaking of which, I want to show you something that I couldn't help but talk about, because I've come to the conclusion that literally Michael Saylor is here for the sole purpose of he's a gold hitman. And so in this little tweet he put out yesterday, because he announced he bought Book, 7,000 or something. This guy says the best thing you can do is sell all 10 trillion worth of gold and buy Bitcoin. Gold is a dead rock. And the first thing that came to my mind is, who are you going to sell it to? And who's the biggest buyer right now? So he's
central bankers.
Exactly. So there has to be a buyer on the end of that trade there. So if you're selling all your gold, if you're telling people to go sell all your gold, there must be somebody on the other end to buy that.
Yeah, the thing is, I spoke about that, I think, in my video today, and someone made a comment, oh, you wouldn't dare have a debate with Michael Saylor. And I said, because I mentioned this, and I said, well, I think this is a good sign that gold is hated so much,
right,
by people like him. So, but I don't have a problem with cryptocurrencies, the blockchain, or even Bitcoin, but I do have a problem. Not a problem, but I think he's misguided, or maybe he's just doing this. Some people have noted that he's like a DuPont family frontman. Apparently, that's where he started out. DuPont. I mean, they are deep state, the DuPonts.
Yeah.
So who knows?
Yeah, I think it's very disturbing, because, of course, I'm sure you can help. I'm sure you noticed David Morgan and John Perez.
I have been following that. It's
right.
Yeah, it's even related to Maxwell and Epstein.
Yeah.
Tether. I mean, Tether. There's rumors that they do have Evergrande offshore commercial paper. I was looking earlier this week at the. You can go into the Tether website. They don't have an audit, but they have something done that's called something different. I don't know what it's called, but this company did for them, and they show all their balance sheet, assets, liabilities, and they say they've got about half their assets in short-term commercial paper up to 150 days, but they don't say which ones those are. And
is it this website right here?
Yeah, Tether, the Tether website. If you go into
transparency, what we got here?
Proof of funds there, maybe.
Well, proof of funds. Where you see that?
It's right there. I think they've just updated it. Up, and there are more Cayman. Click on more. Yeah, click on that.
More Cayman. The Cayman Islands, huh? Okay.
Yeah, that's also worrying, isn't it?
Yeah, exactly. So this is just their website here.
No, sorry, go back. Let's go back.
Okay, we got the report.
Oh yeah, the report. There you go.
Okay.
Let me scroll down.
So it looks like we're going to be right around here. I see some numbers. Consolidated total assets, at least 62 billion, which is currently classified as.
No, you got to go more, because then it shows you the whole thing. Scroll down a bit more, a few more pages.
Okay.
There you go. There, you see.
Yeah. Okay.
They've got commercial paper and certificates of deposit. It's all basically half of their assets.
Mhm.
And if you go into commercial paper, they say it's an average of A2, which is just above. It's just investment grade. And when they
Mhm.
say average, you could have A3 and other,
Yeah.
which is really junk. And
That's
it doesn't really tell you where they're investing that. So
right.
people who say they might have some Tether commercial, not Tether, but Evergrande,
Evergrande. Yeah.
or
So
they could
I
have
mean, that's
other
459
Chinese.
million. That other 459 other. If you say it could be junk, that's 459 million worth of what could be considered junk. That's pretty substantial.
Yeah, that's right. And
Extremely.
they're supposed to. They started out as being $1 for one Tether,
Mhm.
and now they kind of changed it. It's they don't hold all cash. It was understood that they had 100%, cash dollars
Mhm.
backing Tether, but now it's like all commercial paper or a lot of commercial paper and stuff.
Yeah. All right, so we have a couple more stories here. As always, for those that are tuning in, feel free to throw out a question or something like that. And I see Mr. Low Blood Pressure has something here. Let me see. It says would you guys ever consider buying real estate in China during a fire sale?
You
No.
want to answer that? Yeah, that a big fat no for me.
They don't have any property rights over there. I think the CCP gonna crack down
He
even
also
more.
is asking whether Max Kaiser is a Russian agent moving
Let me see.
Americans away from gold.
Moving back away from gold and trapping them in the
Well,
Bitcoin.
it's possible.
Yeah, anything's possible. But my biggest
Max,
problem is about how people are so zealous over Bitcoin to where they don't leave
well,
any room for both. Like even in Michael Saylor's little thread, people are saying, "Man, you crazy, man! I never get rid of gold. Why not do both?" So even people who
yeah.
follow him are saying, "At least do both. You don't dump gold. At least do both." And I'm like, what? Like, what does he have against gold other than the fact that he's trying his best within a short time frame to get as much of the world into that digital space in time for that next planned event that they may have coming soon. So, yeah, we'll find out, but definitely don't get rid of
Max
your weight.
Kaiser years ago, he was very much into silver.
Mhm.
He even had a campaign, buy silver and
Break
sink
the banks or
JP
something.
break JP Morgan, buy
Yeah.
silver. But he's forgotten about silver and gold now. So
Yeah, he's
I don't
done
know.
quite well. And the big so it looks like he's going to he's moved. I mean, him and his wife is moving to El Salvador. They're getting citizenship or something like that, because you can exchange a certain amount of bitcoins for citizenship. So we'll see how that plays out. But
I heard that years ago because I met a guy a few months ago. Went to this lunch, and he went to a lunch years ago. Bitcoin people in London, and Max Kaiser was there, and a lot of the people that were there, they had been there was some hackers stole a lot of their Bitcoin. So I'm that's what I was told. So I'm not too sure he has as much as he professes to have, but I'm sure he's done all right though.
Yeah, I don't doubt in the way he's
But
preaching.
I don't know about El Salvador.
Mhm.
If I'd want to go live in El Salvador, just because they've got Bitcoin as legal tender.
Yeah,
I mean, and if you look at, like you said, a lot of central banks, what have they been buying this year? Not Bitcoin,
right.
gold.
Here's another question here from Mr. Keenan. It says, explain the derivative risk of Evergrande.
Do you want me to go into that?
Go ahead, have at it.
Well, it's unknown, Keenan, because a lot of these derivatives are off balance sheet, and they're basically bets on the bonds, on the Evergrande bonds. Be they, I'm not sure how big the derivatives market is in the Chinese domestic market. They have a 300 billion liability, but I think these offshore bonds, dollar bonds, they're in, I don't know how much they are, maybe 20, I could be wrong, but let's say $20 billion. So it wouldn't be as probably a big derivative exposure as Lehman, but it's unknown because a lot of these derivatives are over the counter. They're tailored by the bankers and the traders.
Yeah.
They're not like futures and options, which are traded on an exchange where you get the data from the exchange every week. So it's unquantifiable at the moment. I personally don't think it's that big. But what's more worrying is all the other derivatives that the too big to fail banks have,
Right.
and that those banks might have exposure to the Chinese real estate market. That's the problem there.
Right. And I'm trying to find and see if I can grab a number of any kind, but other than just was as it says here on Investopedia, just talking about how big is the derivatives market. And here you got it as a measly 1 quadrillion. So
yeah,
1 quadrillion. So of course I'm assuming
it's 1,000 trillion.
Yeah, it's going up since then, I'm sure. But it's all to me, it's all interconnected, and that's the stuff where the trying to understand the piping of the system is so confusing that I don't even go that deep.
Well, I interviewed London Paul the other day from the Sirius report, and I highly recommend London Paul. And he said the financial system is like a black hole. You don't know what's in there.
It's confusing as hell, and it can take you down a rabbit hole where it's like something's gonna give, and that is the peak of it is all debt, and it's coming down right now.
And that's why you have to get your weight up
exactly
the system, not in ETFs.
Chris, appreciate you, my man. It says, what will the Fed ultimately do? Fight inflation or surrender to it? They're going to fight to the finish, I think. And the finish will be what I think they want, which is to transition us towards our digital economy, solely digital economy. So that's just my 2 cents.
I think they're not fighting inflation personally. I don't think they're going to inflate. They're going to inflate till, they're going to try to keep inflating as much as possible.
They're going to tell us. They're going to tell us that they have to address it. They have to fight it.
You know but
they're going to tell us that, and the mainstream media will eat that up. But then again, their actions always are opposite of that.
If Powell was fighting inflation, interest rates wouldn't be at 0 right now. We'd be at 20%, because 40 years ago, when CPI was at 6.8, the 10-year yield was at almost 15%, and the short-term rate was over 20%, not at 0.
Yeah.
So, like you said, it's all talk.
It's all talk until the finish line.
So all bark and no bite.
Yeah. Now let me share with you just some observations that I've been gathering over the last couple of weeks, in my area. So I think I might have mentioned it before, but I'm witnessing more and more of the closing of a lot of the smaller local banks. At the same time, I believe that they're deliberately, because I saw even somebody posted that their credit union put up a sign saying that they're not receiving their normal. It used to be coins, now it's more so notes. So they're not getting enough notes, whatever. So please bear with us. We're trying. So I'm thinking between the banks that are being closed deliberately, as well as I haven't looked at the charts, but I'm not sure if they're providing enough notes. They're deliberately trying to create a squeeze so that at some time in the possible near future, there won't be enough cash to meet demand. Therefore, speeding up the need of the governmental injection of that we need to directly deposit, or we need to directly provide this, because the banks and all that chaos that they're trying to ensue.
It could be part of this Fed coin.
Yeah.
Central bank digital currency. But I saw, I don't know if we spoke about her last week. That woman that was nominated for,
the comptroller.
She like stepped down. Because I think so that's encouraging. But last year as well, the Fed was holding back on the coinage for no reason whatsoever. They used, of course, lockdowns and the pandemic as an excuse. And I mean, if they're doing the same thing with the banknotes, it's also because they're trying to push people to use cards and more digital currency instead of real. Some people call it cash. If you go back far enough, those are banknotes, and cash is really gold and silver or specie, but let's call it cash. They're trying to take people away from cash. They're doing the same thing here, even though you can still get coinage and banknotes.
Yeah.
But here, I don't know if you've got contactless payments.
Yeah. It's growing.
I think prior to the pandemic, the maximum you could do is £20 without contactless.
Yeah.
Because it's dangerous, someone steals your card, they can just go. They don't need the PIN.
Right.
But then during the pandemic and lockdowns last year, they increased it to 35. Now, guess where they've increased it to? 100. So they're really pushing people out of trying to push people out of cash.
It being convenient and easy is how it's being sold all along. It's a part of their plan. And then this is where I want to go next with this article here that hasn't really gotten much attention, but it looks like, according to what I was able to read here, it's what would be considered a second exercise. And it happened to include the IMF, 10 countries, and they played through some scenarios of what could happen. And one of the things that caught my attention was, I can't read it here, but I already used up my limits. But in the article, if I can,
I've got here. I've got the whole thing you sent me.
Yeah,
so I can read it. I can
go ahead. Or you want to share? You can, if you can share your screen and you want to read from it, go ahead. Or if you want to just read it.
Yeah, let's share it. Hold on. How do I share?
One of the highlights of this exercise was the government's response to bank runs. And I'm thinking like, wow, that's very interesting. So you're closing a lot of banks and you're limiting notes. So that right there going to create a hell of a panic. And it's the government's response. And therefore, I imagine it's going to be some type of direct response as far as the Federal Reserve needing direct access to people to get them funds in time. So it's quite obvious what they're trying to do.
Not giving me access to share.
Okay, if you can't do it, don't worry about it. But
I see. Wasn't there something in July or August they did something?
Yeah, it was. I think it was June or July for the Cyber Polygon.
Polygon. Yeah.
And then it was this one.
In that picture there is that the Israeli flag is right in the middle.
Right in the middle.
And Israel now is pushing for a fourth. You know what?
Right. Very timely. So someone asked me other day my thoughts as to when could all this play out, and my first guess was it will be easier to get this thing rolling if this is part of their plan sometime in the winter. And so I'm not sure, like definitely not before the end of the year, but between now and before spring hits, to have some type of event like this to where it'll just be harder for people to hit the streets and protest and heading into in winter. Rather than but spring also is a good time frame as well, because we also have a lot of spring marches and stuff like that people have done.
It could be Christmas.
Yeah, never sleep on that. That'd be 2 weeks from now.
That would be ideal. Piss people off, wouldn't it?
It'd piss a lot of people off.
Well, maybe not piss people off, because a lot of people are not aware of this, but those of us who know what they're up to, I wouldn't put it past them.
Yeah, but it's very concerning. But yet, you have 2 exercises, and so as you would say, 3 strikes, you're out. So, will that third be the actual event or what? But who knows? But anyway, for those tuning in, feel free to throw out some topics or whatnot. We can touch on it in the chat and keep it going. But as of right now, Mario, what do you think with this current 6.8 handle that was dealt to us, the upcoming Fed meeting, which is fast approaching, they're going to have to address that. Do you think that it's going to give them all they need to really push this? We're going to dial back sooner, meaning, cut 30 billion in bonds and raise rates faster. What?
Yeah. Well, I think Powell is already changing the amount of taper. He's done. I think it was 15 billion, and he's expected on the 15th to double it.
Yeah.
So that I think it's going to be the same. It's not going to change anything. But the thing about Powell is that he's changed monetary course several times. This is going to be his 4th change.
Yeah,
and markets and investors don't like too much change. So he's kind of losing it. Even I think CNBC recently questioned his credibility in an article. So that's the whole problem. I don't think there will be much new at the FOMC on the 15th.
Yeah.
But the problem is, and we've said this so many times, and I've been saying it for years, even before they try to normalize policy in 17, 18, 19, because Powell was actually raising rates. He raised it to like over 2%, the Fed funds. He was shrinking the balance sheet, but then everything kicked off. The stock market was almost collapsing at the end of 2018. Then you had the repo crisis. So yeah, they can't really normalize anything. So
Yeah.
they're gonna, like you said earlier, they're gonna try to pretend they're fighting it without fighting it. And I think the reverse repo over $1 trillion, that's helping keep the system liquefied as well.
Yeah, that's something we ain't talked about in a while. The reverse repo situation. That's flying on the radar a little bit. So yeah, so that's the thing. Like we'll never really know what that's all about. Like back in 2019 when stuff hit the fan in August, September, it just came out of nowhere. And then of course, this whole little pandemic kicked off. But here's a question. Nobody special finance. How you doing, my friend?
Hi, Jack. Nice to see you.
Could we be looking at a March rate hike now? Man, I can see them jawbone and talking about they want to, but man, I don't actually see them.
Let me have a look here. What the markets are looking, because if you look at the euro dollar future, let's have a look. You can tell whether they're discounting a rate hike. That's a March euro dollar. Yeah, the markets are discounting like a chance of an 1/8% rate hike by March. So it's possible. And I think they might try to hike rates, but more towards the end of 2022. That's the way I see it.
Yeah. So
I think they still
able to get more than one, or just one. One will be
1/8 would be. We're right now. The Fed funds set target is between 0 and a quarter.
Yeah.
So they could raise it to 0.125 to 0.375. You see, they could raise it by 1/8 of a basis point of a 1%, which is 12.5 basis points, which is really tiny. It's 1/8 of a basis point of a percent.
Yeah.
It's not even. It wouldn't even be near 0.5%.
Yeah, but that's
where we are right now. It looks like we're that's the top of the range from 0 to a quarter. So they could raise it from 1/8 to 3/8, you see, or maybe to a quarter to a half, because they got like a target. So
yeah, I'm not quite sure what that's going to do for their inflation numbers, but I guess it sounds good. I mean, I guess the attempt is there, the thought is there. Oh man! All right, let's keep it moving.
What I would say to nobody special finance is that they will find probably a lot of excuses going for in the next few months not to have to raise rates. I mean, I think this moronic variant or Omicron, they're going to use that a lot.
Okay, so here's from Mark says, did you see that someone from the CFTC is quitting? I did see someone mention that. I didn't dive into it myself, but are they running from something? Is something about to give?
Perhaps? Well, I don't know. I mean, the CFTC, they're in there for the big banks, really.
Right.
I think, it was created to really to hurt the small investor, and that's why I don't get. I mean, I worked in the futures market for over 20 years, and I have done stuff for myself on comex and other exchanges, but I don't recommend people playing around on comex. You saw that Rafi Faber and a group of guys, they've been trying to get a hold of one contract of silver, and they're just like making it really hard. They don't want they want comex to be a place to speculate, not to go there and buy silver and take delivery. Maybe for the big industrial users, they take delivery once in a while, but it's not supposed to. We're not supposed to be doing that. They learned their lesson, I guess, from the Hunt brothers. So it's not really a silver or gold market, comex. It's a paper market. So I could care less if someone quit the CFTC.
Yeah.
To
Yeah.
be
So,
honest.
long story short, get your weight up. Continue to
Yeah.
do what you can.
Yeah, just go outside the system. So what I'm trying to say to the guy who asked the question is that don't worry about the CFTC. If you go to a bullion dealer, they don't care about the CFTC. They're selling you a piece of metal.
Right. Right. And at some point, I think I remember, I think it was earlier a couple months ago, we were talking about what do we think the end of the year price will be for metals. And did you get your Billy?
It says Billy says snore on and keeps stacking.
I thought I remember we were talking about the end of the year prices for metals, and I think we're throwing out some. I think some people threw out some really large numbers, but as of right now, we still got some more time. But
yeah,
they've done the best they could to keep it underneath 30, and I think they're trying to get it below 20. To be honest with you, for silver in particular.
yeah.
But I was watching some commentator talk about the next market sell off. He was saying possible 1,400 gold and $14, $15 silver. I'm thinking like, okay, that sounds good, but yet the premiums are going to be double. So good luck at finding anything that cheap.
The thing is that in the last month or so, we've had some big market drawdowns, like in the stock market. And what was interesting is that the dollar actually dropped massively versus the yen, and gold was actually up quite a bit up until the US came in both those days in the last few weeks. So I'm not too sure about who said that. I think this time it could be the other way around. Gold and silver are going to explode.
Yeah.
And the dollar is going to dump.
We will see here. Okay.
Girl OG, he's a regular on my live streams.
Okay, so what is that? What currency? It was the
Norwegian krona.
Norwegian krona. Okay, it says when
about
mainstream media,
$10 there.
When mainstream media and alternative media is singing the same song, you bet the reverse happens. The crash is coming because of deflation, not inflation. Regardless, the response, the response will be trillions to the tune of numbers we can't imagine, leading towards the hyper.
Yeah. The thing is that it's all about the definition. I'm always talking about that. Inflation is the increase in the supply of currency and credit, which we've had since the Great Depression, since the US went off the gold standard. We haven't seen the money supply ever go down. So that's inflation. And deflation is the opposite. I think Guruji, what he means is that the economy is slowing down and that companies are going bust, like Evergrande and probably a lot of companies in the US.
A lot of zombie companies.
The government and the central bank, the Fed in the US's case, they can just keep creating as much currency and debt as they want to keep things going. So that's gonna overwhelm the maybe the deflation in the private sector, and that's what's going to lead to the in my opinion to the hyperinflation. And it's already doing that because everything that we need to survive, like food and shelter and everything, and fuel is going up in price.
Right.
And I just saw today that the new German government, they're already talking about more stimulus, 60 billion euros, just the German government. So they're not going to stop.
They can't. It's baked into the cake.
Unless we're on a gold standard and they didn't have enough, they couldn't, because their hands would be tied. But we are in a fiat currency system there, so they will inflate away until the currency just collapses, I think.
Yeah.
While the private sector deflates.
Right. And I think, of course, the ultimate goal is to inflate away until that next paradigm. Everything is being set up to cause as much pain as possible to get us into that next digital world. And of course, our article, Bill Gates is out here pumping the metaverse now. So they're trying to lure us into that thing. But Keenan says, would it benefit JP if the COMEX forces settlement in cash at high or low spot, meaning they will never let spot go, or future the premium gap next crisis?
Well,
That's this one.
the cash settlement will just mean that the comex loses credibility, and that's what they're doing to Rafi Farber. They're forcing him to sell his warrants because they're not loading up the physical for him.
Yeah.
So they're already defaulting towards Rafi Farber.
It was interesting how he said also that the people he talked to, they said that he was the first that he's dealt with, and actually someone trying to get delivery. I'm like, huh? Okay, so obviously the system was set up itself just for the paper movement, never to actually do the physical. It caught him by surprise. He's like, hold on a second, let me go check.
I wasn't surprised because having worked for futures and options brokers and banks, we never encourage. I encouraged a client once to take the delivery of silver, and my boss said, "Oh, there's no way we're gonna do it." So I just
they didn't write you up, did they, for trying to help out the little guy? Did you? Did they?
Oh, he wasn't a little guy, but he was like one of the richest men in Norway.
Oh, really?
But,
here's Nature Knows. Appreciate the love offer, my friend. It says, Q, what will you do if the government says you can have silver and gold, but you can't sell or trade it? That's a good one.
I would ignore the government. How can they, how can they police everyone that has gold and silver?
Yeah, there's definitely going to be some type of restriction for those that were prudent enough to put aside real weight in the days in the days ahead. But as far as enforcing any type of
well, how can the government stop Mike or I taking a little coin, silver coin, and then using that to, Mike makes a sandwich and a drink, and I'll give him that, and we exchange. How that's trading. I think maybe what you mean is trading on the exchanges, but what's the point of trading gold and silver for paper anyway?
Right. And I think just as far as the barterability of having some metals, when it comes towards the bigger purchases, i.e. using gold or whatnot, I was watching Lynette Zane talking about, you moving gold to buy blocks and houses and stuff like that. And then when you get into the bigger asset class of how you put that to work for you, then that's when the question comes into play, because I don't think the banks will be dealing with gold directly with you if there are any small commercial banks available in your area. So as far as how to turn that into some credit to make it work for you, not quite sure. Not quite sure at all. Zach says, what are your thoughts on fractional silver? Love it. I love it. I think it's that and like what junk silver, as they call it.
Okay, I see.
So yeah,
what do you mean by fraction? Fraction of what?
Like there's whenever I go to CoinStore, I look for like the 1 gram.
Was that
1 gram
less than an ounce? Or?
Right. So they got the half ounce, less than ounce. I mean, they got the 1/10 of it. They got all types of little small little micro. Because right now 1 gram of silver could be if you were to buy from a coin shop, could be a little bit over $1, but the premium might be $2. But it's real small, 1 gram. That's easy to move. I'm a big fan of those.
Or like I have quite a few silver quarters, 64 and before as well. They're nice. And I have shillings as well from pre-1920.
Yeah,
these are really nice coins. And dimes, I recommend the the junk dimes. They're really nice as well.
Yeah,
and I think you could do a lot of damage with a dime back in the day. Right now, it's still undervalued.
So here's Blunt News says, what's the point in buying and holding gold when the powers that be have complete control of the market?
Yeah, they've got complete control maybe right now, but I don't think it will last forever. They had complete control in the 60s, and that was even an overt control. It was called the London Gold Pool, but eventually the French and the other European countries that were helping the Fed and the U.S. Treasury suppress the gold price in the 60s, they had enough because the market was taking away physical because the market knew that it was too cheap. And they won't be able to keep the price suppressed for that long. If they could control the market 100%, we'd still be at $35 an ounce.
Yeah, and also to that question, first thing came to my mind was, having gold and silver is more so as an insurance policy that you will more than likely you will collect on in the form of unrealized purchasing power after after the powers to be try to burn your house down. You know what I'm saying? Like, it's a reassured policy that you have, that you've taken out yourself.
I think
counterparty risk.
we're gonna get to a point where the price versus the paper dollar won't even matter. You have to keep track of how many gallons of gas can I buy with half an ounce of silver and things like that, and that could fluctuate a lot in a hyperinflationary collapse.
Yeah. I was saying, like, just right now, best case scenario to get an idea as to how that gold and silver will respond possibly in a failing economy is just look at nations, because right now the G20 nations are the most stable. So those are the markets where the metal prices have been the most controlled. But you get outside those nations, the other 170 or so, you see what the price of metals are in those currencies. It serves a purpose, especially in Turkey. And
I would even say it's only in the G7 because Brazil is part of the G20, and you look at the gold price in the Brazilian currency has gone from like around 2,000 some years ago, and it's now like 10,000. So, but I agree with you. Usually, the North American and Western Europe countries, their currencies are protected because they manipulate it. Yeah, there you go.
So speaking of which, you got the silver and the Brazilian real right here. It's at 120. So if you would have had you a couple ounces 10 years or 20 years ago and held on to it and added to your stack all along, it would have done you well. Let's look at gold real quick, and then we'll get ready to dial back. So 10,000 or so.
Yeah, I mean, only you go back to 2012, it was around 2,000 there. So you've done well there.
Yeah. So long story short, you know where to be when stuff hits the fan. When your house is burning down, make sure you're insured. All right, Mario, let's get ready to dial back, man. As always, it's great to connect with you. Manico64 on YouTube, everybody know that. And Rethinking the Dollar, wherever you can find me. Let's end on a good note, man. Anything come to mind? Any words of wisdom you might want to part with?
Well, actually, I think people are waking up. Even the members of Boris Johnson's party in Parliament are like waking up.
Yeah,
and I think people need to hold on and to say no for as long as possible.
Yeah.
Yes, it's frustrating seeing what's going on. They're really pushing the agenda right now for mandating this. But I think it's all gonna implode, hopefully. So words of wisdom, I don't know. Just live within your means and think of gold and silver as, like Mike said, as insurance. Why would you? Yeah, it's nice. It would be nice if it was at 3,000 instead of where we are right now. But if it was at 3,000 right now, it wouldn't make any difference to me. Unless I had an emergency. So I would hold on to it. It wouldn't matter. And I guess it would depend if there's an asset that I might think is undervalued. But look at it as money and savings for a rainy day.
Yeah, I'd agree. And then on a good note, everybody who's tuned in here and everybody who tunes into you are the part of the 1% crowd. You know what's really going on, and because you know the truth, I wouldn't turn this into like a spiritual matter, but yet because you know the truth, you're responsible. You should take it upon yourself to help others any way you can by continuing to be your own witness of sharing truth in regards to this monetary message in particular here, and just try to just love on people as best as you can, but also bring them along with you, because it makes no good for you to be able to not necessarily profit or to prosper in these days ahead, financially speaking, then those around you are not able to even do the bare minimum.
You should help people even if they haven't woken up to what's going on, because that's what it's all about, helping other people,
right?
And not be too big-headed.
Right. Yeah, man. But as always, people, I appreciate you guys for hanging out with us. Hit the thumbs up button. Go subscribe to Manico64 and show them some love if you have not already. And other than that, we're back at it again, Mario. Enjoy the weekend. Everybody be blessed, be safe, and of course, get your weight up. But more importantly, stay prayed up. Put the Lord first. You'll be all right. All right. Peace.